the ultimate guide to calculating the intrinsic value of a stock. One of the questions that many people new to investing have is, what is the intrinsic value of a stock? Intrinsic value is one way of determining how much an investor should pay for a stock. It helps to give context for what you are paying for, which can help you decide if it's worth it. Many investors use intrinsic value as one way to determine when they should sell stocks. If the current price exceeds the intrinsic value, then that could signal that now might be a good time to sell and take some profits off the table. Welcome to Stocks Galore, the place for those in passionate pursuit for investments and personal finance. Smash the like button now and subscribe to the channel to be notified when new videos are released. In this video, we will take a look at the intrinsic value of stocks and discuss how it can be calculated. We will also talk about some practical examples of how stock prices can be determined by calculating the intrinsic value. The intrinsic value is the actual or real worth that something has and not what people believe it is worth or what it looks like it might be worth. The other value is called market value, and this is what other people think a stock should be worth. This market price can change depending on the day, but the intrinsic value remains fixed. The calculation of an asset's intrinsic values is one way to find out its true worth. This includes all of its potential future earnings, discounted back to present day. What is the intrinsic value of a stock? The intrinsic value of a stock is the discounted present value of all the future cash flows that are associated with this stock, including both dividend payments and any future price appreciation. To find out the intrinsic value of a given stock, you need to calculate its fair market value by taking into account a number of factors, including its dividend yield and earnings per share. The 7-step process for calculating the intrinsic value of a stock. This section will cover the process to calculate the intrinsic value of a stock. The first step is to subtract the total number of shares outstanding from the company's total equity. The second step is to divide that number by -1, which will then become your EPS for this company. The third step is to multiply your EPS by 10, which will give you your P/E ratio. For the fourth step, divide this P/E ratio by 20 and round up or down depending on what your answer comes out to be. The fifth step is to take 1 divided by this number and multiply it by 100. For the sixth step, subtract 1 from that result and multiply it again with 20, rounding up if necessary, and finally, take that final number and subtract it from 1. How to calculate the intrinsic value of a stock using the discounted cash flow method. The discounted cash flow method is a quantitative analysis that determines the intrinsic value of a stock. The worth of a company is often expressed in the form of its market capitalization, which incorporates all of the factors that contribute to the company's success. A company's worth can also be calculated by multiplying its net earnings with its share price. To calculate intrinsic value, one needs to determine how much money would be made if an investment were cashed out on day 1. This is called the terminal value, and it is calculated by multiplying the net present value, NPV, with the appropriate discount rate, also known as the required rate of return or risk-free interest. How to calculate the intrinsic value of a stock using the fundamental approach. Some of the factors that would influence the intrinsic value of a stock are its earnings, dividends, growth, and risk. Earnings are how much money a company makes annually. Dividends are how much money investors get back from their investment each year. When there is growth in the company's earnings or dividends, this would increase the intrinsic value of stock. The risk associated with investing in stocks would also have an effect on its intrinsic value. A formula to calculate the intrinsic value based on fundamental approach is below. Intrinsic value equals market value x, earnings per share plus changes in net assets per share / book value per share. Why is the intrinsic value important? Intrinsic value is always subjective, and it can be influenced by mood, time, location, and many other factors. Intrinsic value also refers to the value in use or utility of a good or service. Intrinsic value is what an individual assigns to a good or service. The intrinsic value for different people may be different, because they are looking at the world through different lenses, based on their own personal understanding of the world. Some people may not pay money for something that costs them less time to produce themselves. Other people may value their own time at nothing, so they are willing to pay for convenience. The importance of intrinsic value to stocks and shareholders. Intrinsic value is the part of a company's value that is not related to its stock price. It includes the actual worth of the business, including property, equipment, products, or intangible assets. It's the importance of intrinsic value to stocks and shareholders. For example, if a company has $4 in earnings but owes $5 in debt with interest payments, then their intrinsic value would be -$1 since they have no equity in their business. What are the different types of intrinsic values? Intrinsic value is also known as inherent value. As a result of this, there are three major types of intrinsic values. The aesthetic value, which is the worth and attractiveness of something because of its form and shape. The functional value, which is the worth and usefulness of something because it performs a function or service. The experiential or emotional value, which is the worth and satisfaction that we get from an experience or moment with an object. Conclusion and final thoughts on stock intrinsic value. The concepts of intrinsic value and market value are closely related, but not interchangeable. When an investor is considering buying a certain stock, he or she might wonder what the company is worth on the open market. This is referred to as its market capitalization. A company's intrinsic value, on the other hand, would be what it would be worth if it were liquidated and all assets were sold off at their full values. In conclusion, the total value of a stock can be determined by considering both aspects of its price: how much it costs to buy from someone else, and how much it would be worth if it were turned into cash right away. If you enjoyed this video, smash the like button now and subscribe to the channel to be notified when new videos are released.